Hello students, welcome to today's session on uses and importance of financial statements. So now let's talk about, we have been talking about the financial statements. I have told you the objectives and types of financial statements also. And I have also in my previous video, I have also shared with you the formats of balance sheet as well as P&L statement. Now we talk about the uses of and importance of financial statement. Okay. So the first can say hmm, okay. So the first use that is can be seen is the report on stewardship function. Yeah. Okay. Now what is that? So basically, the financial statements report the performance of the management to the shareholders. So so with the help of these reports, if there is any gap between the management performance and the ownership expectation, that can also be understood, right? Then the same time, this format of we can say or statement is the basis for fiscal policies. Okay. So as we know, fiscal policies are basically the government policies to run the economy or the country, right? So, so here we, more specifically speaking, we talk about the taxation policies of the government, which are related to the financial performance of the corporate undertakings or companies. The financial statements provide basic information for industrial, taxation, and other economic policies of the government. Okay. Then the third use, as can be seen here, is the basis for granting a credit. Credit means for the loan or any kind of borrowing that company requires. So these companies have to borrow funds from banks or other financial institutions for different purposes. So credit granting institutions like these banks or financial institutions, they take decisions based on the financial performance of the company only. Thus, financial statements form the basis for granting of credit as well. Then these financial statements also act as the base for the prospective investors. Investors meaning those people who have immense money and they want to invest their money into some good company so as to increase their money also. At the same time, company also gets benefited. These investors may be the short-term investors as well as the long-term investors, and their prime consideration is that their investment decisions are um, uh, their investment decisions are secure, and the money is not lost, right? So the financial statements help the investors to assess the long-term and short-term solvency as well as the profitability of the company. Okay. Then this also acts as the uh, guide to the value of investment which has already been made. So basically, we are talking about the money which the shareholders have already invested in the company, right? So shareholders of the company are very much keen in knowing the status, safety of their money and the return they are going to get on their investment. They may also require information to take decisions about the continuation or discontinuation of their investment in the business, right? So the financial statement provides information to shareholders in taking such kind of important decision. Okay. Then these statements also help the trade association in helping their members. So trade associations may analyze the financial statements for the purpose of providing service and protection to their members. They may develop standard ratios and design uniform system of accounts. Then the last, I can say, uh, help or use a financial statement may have would be in the stock exchanges. Right? Why? Because these financial statements basically help the stock exchanges to understand the extent of transparency in reporting of financial performance, and mm, therefore as so that they are able to protect the interest of the investors who are investing through these stock exchanges. Right. So the financial statements help, or you can say, enable these stockbrokers to judge the financial position of different companies and then take decisions about the prices to be quoted. Okay. Now we talk about the limitations of financial statements. These are limiting statements as well. They have certain limitations. So now let's talk about their limitations. Okay. Mhm. So the first limitation is that these financial statements do not reflect on the current situation of the company. All right. Yeah. So basically, these financial, why? Because these financial statements are prepared on the basis of historical cost. Right? As I told you, usually when are these prepared? They are prepared at the end of the financial year. Right? But suppose a machine was purchased on the 1st April of the last year. That is beginning of the financial year. So its cost will be shown, the cost on which it was purchased, not today's cost. So these financial statements are prepared on the basis of historical cost. Right? And since the purchasing power of money is changing, the value of assets and liabilities shown in the financial statement do not reflect the current market situation of these assets. Then the second limitation is that these assets may not realize. Now, what does that mean? So, accounting is done on the basis of certain conventions. Some of the assets may not realize the stated values if the liquidation is forced on the company. Right? So, in this case, what happens? The companies show these assets in the balance sheet as merely unexpired or unamortized cost. Unamortized cost. Then these are biased results also. How we can say that these are biased results? So basically, the financial statements are the outcome of recorded facts, accounting concepts, and conventions used, and personal judgments made in different situations by the accountant. Therefore, that accountant's bias may be observed or may reflect in the statements or in the results, right? Okay. Then this gives or this provides the aggregate information about the company. Okay. Now, that means uh, from this financial statement, anybody who looks upon this can get an overall information about the company, but not the detailed information. Right? Therefore, they can become a base for decision makers, especially for the outside investors, but they do not help much in decision making. Okay. Then it is also said that this does not even include the vital information, right? Why? Because the balance sheet especially does not disclose information relating to loss of markets, cessation of any agreement which has um, uh, or which plays a very important, very significant role on the company. So that information, though it is so vital, right, for any investor, for at the time of making decision, is missing in these statements. Okay. Then, as we know, when we make these statements, this is the quantified information about various activities which are happening in the business, right? So these financial statements uh, only talk about or give the information in monetary terms, but not in qualitative terms, right? Like, for example, these information, these figures are not going to give you any information regarding the industrial climate, labor relations, quality of work, industrial relations, etc. And then the last limitation is that these are only the interim reports. Now, what does that mean? See, basically, the interim reports means the statement of profit and loss disclose the profit or loss for the specified period. This again, as I said, this specified period can be one accounting year also, at the same time can be one quarter also, or maybe 1 month also, or 1 day also, right? So this does not give an idea about the earning capacity over the time. Okay. Then, okay, so that is why when we say, again, when we make balance sheet, how do we write? Balance sheet as on 31st March, so and so. Meaning, the financial position reflected in the balance sheet is true at that point of time, which may likely to be changed on a future date, which is not depicted in the balance sheet. Right. So, yeah, students, that's all for today's session. I hope you all understood this topic. Keep practicing, and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.